Hello, good morning, ladies and gentlemen. How are you doing this morning? Can I confirm that you can see my screen and you can hear my voice clearly? Kindly type in hi in the comment section so that I am certain we are all on the same page. Okay, please type in hi in the comment section if you can hear me and you can see my screen. And let's get this session started. Okay, Carrie, good morning. Thank you for that confirmation. So we have FE18 in the house. Good morning to you. 929, good morning. Oh, great. Thank you, Carrie. We have Rooster97, good morning to you. 766, good morning. Oh, Catalina23, good morning to you. How are you doing? I think this is your first time, right? I'm not sure I've seen that name before, but anyways, you're welcome. Okay. So let me take this as a confirmation that you can hear me and can see my screen. So let's get the session started. Okay, good morning, Magda17. Good morning to you. All right, so I welcome you all to yet another promising session on Experience Speed Live, hosted by myself, Sheriff Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. So as usual, the first thing we are going to be doing today is to deliberate and look into the pairs we be monitoring since the beginning of the week. So we are going to be looking at how well those pairs are doing, after which I will be sharing with you my thought process on how I intend to manage those trades. And if you have any pair you want us to look at, any pair commodity or cryptocurrency that you want us to look at, feel free to drop it in the comment section and I will incorporate it into my plans for today. So without further ado, let's dive into the chart and let's see what is happening from the technical standpoint. So Rec, good morning, glad to have you around. Okay, so the first pair we are going to be looking at today is the US oil. And on the US oil, what do we have here? So in the last 24 hours right now, price appears to be trending to the downside on the US oil. And what was our expectation yesterday? Let's do a quick replay of what our expectations are before we dive into what we are going to be doing against the New York session today. So where were we yesterday? We were around where yesterday? So yesterday we were around the let me see, we were around those points yesterday. We saw this hammer candle running during the course of the live session yesterday, and remember we took advantage of this move right from this area. That is, on Monday we took advantage of this move and price moved according to our expectation, as we were able to see price run into about over 250 pips move as at the time we were running this live session. And one thing we said yesterday was that we want to be looking forward to another opportunity, especially for those who missed out on that previous situation we have here. So we expected that price might likely come back and do a retest to structure, probably the $90.50 area or the $89.50 level, before we want to be seeing a trend continuation to the downside. And lo and behold, that is exactly what happened. So the market appears to have given us a second chance to join the decline at this point. In fact, we had multiple entries of this area, which also lines up with the bearish trend line that we have here, giving us a clue of how strong the sellers are at this point in the market. So with the current structure we have here, we were able to add one more position to our existing trade as price moved right back into the $88.50 level, though we had a situation where price came back to our entry zone in the last 4 to 5 hours now, and what we saw here has been multiple rejection of that level, also emphasizing the strength of the sellers. So what we've seen around the $89.50 level is more or less a rejection of that level from the sellers as buyers try to push price to the upside, but we continue to see selling momentum from that area. So we have multiple rejection from that level. So if you had joined at this point, you will probably be with some profits around, let's see how many pips that is. If you are joined around this point, probably around 25 pips thereabout, which is not bad. But if you have been with us since the beginning of the week, then definitely you have two positions running. The first one running with about 200 pips, with the 20 pips thereabout, so you have a total of about 230 pips running at this point in time. So now with the information we have here, let's go into an holistic perspective and let's see what is really going on the larger time frame, so that those who are not part of the session on Monday and Tuesday will be able to see how we got to this point of deciding to sell the US oil. So now let's scale back into the daily time frame and let's see what is really happening at this point. So I want to delete this, so let's have a clean chart here while we scale up to the daily time frame. So now on the daily time frame, the first thing we would observe on the daily time, let me delete this, let's delete this. So the first thing we are going to be observing on the daily time frame is that price action, though, has been on a very strong bullish momentum since in the last 2 years now. You can see we have this bullish trend line, the green line on your screen, as price action has continued to respect that bullish trend line in the last 2 years. Well, if we zoom into the structure we have since the month of June, we can see that price has consistently trended to the downside, finding lower lows and lower highs. And as a result of these, we were able to connect a series of lower highs here to give us that resultant bearish trend line. So we saw price collapse right back into the bullish trend line within in the month of September, though we saw the breakdown of that trend line happen, and since then price has climbed right back above that bullish trend line to insinuate that this breakdown of the structure could be considered as a false breakdown. So now, in addition to the current structure I've just shared with you right here, we were able to identify a very strong key level at the $86 level, which has served as a major determinant of price action in the past. If we go to as far back as the early days of the month of August, we can see how the $86 level has been a major buying niche for participants in this market. We can see we saw attempts by these buyers to push price to the upside, not until the first days of the month of September we saw the significant breakdown of that key level. Price came back again, but was met with stiff resistance from the sellers, and since then price has been trending on the lower side. However, during the course of last week's trading session, we saw an outright breakout of that key level at the $86 area, which also shares a confluence with the bearish trend line that we identified here. So you can see how significant that area is. So we have both price coming right above the bullish trend line, that is one, and then we have the key level at $86 level broken during the course of last week's trading session, and we also have the bearish trend line also broken to the upside to emphasize the strength of the buyers at this point in the market. And from a technical standpoint, whenever we cite a breakout of structure like this, we expect that price is likely going to come back and do a retest of structure, after which we want to be looking out for patterns on lower time frame that will be supporting a trend continuation to the upside. And remember, during the course of last week's trading session, the OPEC Plus had their first physical meeting, since the pandemic, and the summary of the meeting is that they want to be cutting oil production. And definitely when you hear such a news like that production is going to be cut, definitely the demand is going to increase, hereby shooting the price of the oil to the upside. And that is evident, was reflected on the chart as we saw this impulsive move to the upside. And right now, as soon as price got into the $93 level, what did we notice here? We noticed that price has continued to find bearish momentum, and this could be as a result of quick selling attempts by the participants in this market to take some profit from the advantage they took last week. So we can see how in the last 2 days now we've been having bearish candle in that regard. And this is more or less looking more like a retracement of that previous impulse leg here, which also lines up with the technical understanding that whenever we have a breakout of structure, that price is likely going to come back into that structure to retest it to push price to the upside. So right now, the bearish momentum that this week has started with, we've already been enjoying the bearish momentum to the downside here, but we don't know how far this bearish move is going to go. How far is it going to retrace? Is it going to retrace into the key level here at $86 level, which has been serving as a major determinant of price action in the past to push price to the upside? Or are we going to be having a situation where the price is going to retrace back into the structure that was broken last week before we start seeing that trend continuation to the upside? Or are we going to be seeing that trend continuation to the upside right from this area during the New York session today? Well, to answer this, we will need to scale down to a much lower time frame. Let's see what is really happening. If there is an opportunity to add more position to our sell position, or we should be getting ourselves prepared for buying attempts today. So in order to do that, I want to share with you something we identified on the 4 hours time frame. And what we saw on the 4 hours time frame was quite interesting. As we saw since the beginning of the week, price was caught within a channel before we cited the breakdown of this channel. So price was caught within the $93 level and the $91.50 level at the beginning of the week. We saw the breakdown of the structure, and price has continued to trend to the downside from that area. But something interesting has happened since the early hours of yesterday, the beginning of yesterday's trading session. We saw how the $88.50 level has been met with safe resistance from the buyers. So every attempt by the sellers to push price right below the $88.50 area has been met with strong resistance from the sellers, hereby giving this level a support area. So now we need to take this into consideration, as well as this bearish trend line that I was able to identify during the New York session yesterday. So we have a couple of parameters that will be guiding our actions going forward. So one of the things we are going to be looking forward to today is, one, are we going to be having a breakdown of the $88 level 50-cent area, taking out all the buy positions from this area to signal a trend continuation to the downside. That is one scenario we want to be looking at today. Or are we going to be having a situation where we are going to be seeing a breakout of that bearish trend line, this bearish trend line, and look at the $89.50 level as well, sharing a confluence with that bearish trend line. So if we have a breakout of that trend line, then definitely this could be a signal that we might be having the beginning of the trend continuation. That is the beginning of the second wave of the bullish momentum that started last week. However, we don't want to get too excited when that bullish signal happens, as we want to wait for further confirmations to happen in the form of a retest of the $89.50 level, or probably this bearish trend line, or probably somewhere around here, where we now want to be looking out for patterns on lower time frame to join the rally to the upside. So these are the two scenarios we want to be looking forward to during the New York session today. So in that regard, we will scale down to the lower time frame, that is the 1 hour time frame, and let's see things more clearly, and let's make a decision on how we intend to trade this during the New York session today. So now, with the current structure we have right now, well, the first thing I will say definitely, obviously, is that you move your stop loss to lock in some profit at this point in time. As for those who are joined this move right from this area, definitely you want to be locking in some profit so that you don't get caught up in any sudden pullback that is likely going to be happening if price breaks out of the structure. So after moving your stop loss to break even at this point, what's the next thing we want to be doing? So now we want to be looking at how price is going to relate to this level. Remember, this is the bearish trend line, which also shares a confluence with the $89.50 level. So if we are going to be having a reversal pattern here, which looks like it's already happening, the price has continued to reject this area, then we want to be looking for a breakdown of structure, retest of structure to join the decline to the downside. And if a breakout of this $89.50 level happens, we are not getting too excited. We want to wait for price to do a retest to structure, after which we look out for patterns on lower time frame to join the rally to the upside. So with this information we have here, let's see if this is going to transpose into a reversal pattern. That is the multiple rejection of the $89.50 area. Let's see if it's going to transpose into a reversal pattern to send price going to the downside, or a breakout will be sending price go to the upside from here. So let's see what is really happening around here on the 15 minutes time frame. So what we want to see what is really going on around this area. Let's see if we could draw a structure around here on the 15 minutes time frame. So I will scale down a little further into the 15 minutes time frame. So let's see what is really happening around this point. So the first thing we'll do here is to bring out our line chart so that we can have a specific point of connection here. And if we bring out our line chart here, this is what we have. We have a temporary bullish trend line, which I'm able to identify here. And we shall be using this to guide our action during the New York session today. So is this bullish trend line going to lead us into a bullish momentum during the New York session today, or is it going to give us a signal that there is going to be a bearish continuation? So now what are we going to be looking forward to at this point? Well, what we're going to be looking forward to here is that if price breaks down that bullish trend line, then that is a signal, a retest to structure, which also lines up with the trend line we identified on the daily time frame, will probably be giving us a signal of a trend continuation to the downside. And if we are going to be selling the US oil, remember our take profit target still remains right around the $86 level. That is the key level that we identified on the higher time frame. So the reason why we are having our take profit target at the $86 level is simply because of how this key level has been a major determinant of price action in the past. So we want to see how price action is going to relate to the structure. So we are going to be having our take profit target somewhere around here. At the meantime, we want to see how price is going to relate to that structure. If we have multiple rejection by the buyers from the structure from this level, then definitely we want to be seeing that as a trend continuation to the upside. However, if a breakdown of the $86 level happens, a retest of structure will be giving us confirmation to add more position to our existing sell position that we have here. So that is the first scenario. That's how we're going to be looking at the first scenario. That is a selling opportunity here on the US oil. Then the second scenario is the bullish momentum, which I told you earlier. That is price breaking right above the $89 level. Price comes back to do a retest of structure, either the retest of the bearish trend line here, or probably the bullish trend line here, to continue to send price go to the upside. And if that happens, we want to get ourselves ready to take advantage of that move. So this is what we are going to be looking forward to on the US oil. So I was able to paint all the possible scenarios that is likely going to be happening on the US oil for today. So our duty is to be on standby to be able to take advantage of any of these opportunities when they finally happen. I always advise that you can munch my screen so that you can use it as a reference point when you are about to take your individual decision on the pairs we're deliberating on this platform. So if you have any question regarding what I have discussed so far, feel free to drop in your inquiries in the comment section. If there is any questions whatsoever, let me know, and I am willing to be of help. So what I'll be doing right now is to take the next 10 to 15 seconds to read through the chat and see if there are any questions regarding what we are talking about before I move on to the next pair. So let's see what's happening in the chat. So we have Farah44, who wants to win. Sure, that's a good spirit. 226, hi, good morning. Alex Gab, good morning to you. Farah Okay, so we have 123 Sarah, good morning. All right. Heavy Rule says the video is buffering all the time and sometimes it plays. Oh, I will suggest that you restart your app. Restart your app and make sure that your internet reception is of optimum service so that you'll be able to enjoy the video. Please do that, okay? Oh, innocent babe, good morning to you. Well, I'm fine, thank you, and trust you are doing well today. What is the resistance of gold? Oh, we will check gold definitely. I think in the next couple of pairs we're going to be looking at the gold, so please stay tuned in so that you don't miss out on that. All right, I'm glad to hear you're good, innocent babe. Okay. Steamroller, good morning to you. How are you? I didn't see you on Monday and Tuesday. Trust you're doing well. Moriasmin, good morning. How are you? Oh, okay, okay. All right, Steamroller. All right. I'm well, thank you. All right, so let's move on to the next pair right now. I think the next pair we're going to be looking at is the US tech. So let's move into the US tech. What's happening on the US tech? Well, we have a very positive situation on the US tech as price has continued to trend to the downside, though we are within the buy zone, the demand zone we identified on the daily time frame. I'll be sharing that with you in a moment, especially for those who are not part of the session on Monday and Tuesday. So let's see, what was our expectations yesterday? Where were we yesterday? So we were around somewhere around here yesterday. That is around this support level here at the $10,850 area. And we actually took advantage of a bearish momentum on Monday. If you remember, we saw the situation here on Monday where we had the breakdown. We had a channel on Monday where price has been consolidating within that channel between the $11,050 level and the $10,950 level. And then we said if we have a breakout or breakdown of the structure, we want to be joining the direction at a retest to structure. So we had a little breakout here, which appears to be a false one. Then we saw the significant breakdown of that channel at the $10,950 area, and then price came back to do a retest to structure, giving us a confirmation that price is likely going to be going bearish for this week. And price continued to the downside here. We took advantage of that move yesterday, and as at yesterday we were around here, and I told you to lock in some profit here, and definitely when we locked in some profit, we expected that price is going to come back into the bearish trend line here, which we identified here. So you will be taken out of the first position, but you will have done a re-entry at this point as price continue to trend to the downside here. So right now price came back one more time, and then it appears that price is likely going to be giving us another third chance to add more position to this trade. So this is what we saw yesterday, and we can see that the week has started on a bearish note as price has continued to trade right below the $10,950 level. So at this point in time, definitely I'll be advising you to move your stop loss to break even at this point. We want to protect our position. Remember, we are still within a very strong demand zone at this point, and we don't want to get ourselves caught out when the bullish potential probably come in and take advantage of this position. So let's quickly run through an holistic perspective of what we have been looking at since Monday, and this is going to be of usefulness for those who were not part of the session on Monday. So let's go to the daily time frame and let's see what we were looking at on the daily time frame. So on the daily time frame, what we saw here is more or less a very strong bearish momentum since the beginning of the year, and we were able to connect a series of lower highs here to give us that resultant bearish trend line. However, looking at the current structure we have here, we can see that since the month of June, price has continued to reject that level at the $11,000 area. So we can see buyers have come here to push price to the upside multiple times. We saw something like that also in the month of July, and then if we fast forward into the month of September, we saw multiple rejection of this area by the buyers to give us a clue into the strength of the buyers at this point in the market. So we can see that the demand zone around the the $11,000 area has been a very strong niche for buyers in this market. Now, because price is still within that demand zone, we have been looking forward to buying opportunities from this area. That is, price might likely start again to push price to the upside and probably come back into the $12,000 area before we start seeing another phase of a trend continuation to the downside, but that has not yet happened. So we want to see what is really happening within this demand zone. Though we have a little breakdown of that structure, we have price right below that demand zone here, but we don't know if this breakdown is going to be turning out to be a false one, or is it going to be a confirmed breakdown. So in order to have a better perspective into this, we will want to scale down to the lower time frame to have a clue of what is really happening around there. So scaling down to the lower time frame, this is what we saw at the beginning of the week. We saw a consolidation phase right between the $11,050 level and the $10,950 area before we saw the breakdown of that structure, which I showed you earlier, and price has been trending right below the $10,950 level, giving us a clue that the sellers are trying to make a statement here. So to guide our action, what are we going to be doing for this week? So the first thing we did here is to identify this bearish trend line. As you can see, this bearish trend line has been respected since the beginning of the week. We have the first touch here, price came down. We have the second touch and price came back down here, and during the early hours of today we saw price coming back again to do multiple rejection of that trend line. So now with the trend line we have here, we can see that we have a little breakout of that structure here as price is trading right above that trend line. So what we want to know right now is this breakout going to send price to go to the upside? Remember, we're still within a very strong demand zone we identified on the daily time frame, or we could be having a situation where price will come under the bearish trend line to continue to the downside. So what we're going to be doing in the New York session today is to have a key level that will be guiding our action going forward. So the $10,850 level appears to still be very valid at this point in the market. So what we want to be doing to sell. So for those who had actually missed out on both these opportunities we took advantage of since the beginning of the week, what we are going to be looking forward to at this point is that let's see if we are going to be having a breakdown of the $10,850 level, and if a $10,850 level gets broken down during the New York session today, then definitely we don't want to get too excited, as we want to wait for price action to give us a confirmation, which is likely going to come in the form of a retest of either the $10,850 level or the bearish trend line here, after which we look out for reversal patterns on lower time frame to join the decline to the downside. So that is the first scenario we are looking forward to at this point. Then the second scenario that I want to be looking at on this one is the bullish possible situation that might happen as well. If we look at what has been happening since the beginning of the week and compared to what has happened last week, we saw that we've been having a very strong bearish momentum since last week, and since price got into the demand zone area, the bearish momentum has been dropping. We've been having diminishing value in that momentum. So what I'll be doing here is, if we finally have a breakout of the $10,950 area, then I want to be seeing the situation around here has a reversal pattern. So if a breakout of the $10,950 happens during the New York session today, we don't want to get too excited. We want to wait for confirmations to happen before we want to be joining that. So we will wait for price to do a retest to structure. It could be the $10,950 area, it could be the $10,850 area, but the most important thing we want to be looking out for on a lower time frame is a reversal pattern or patterns that support a trend continuation to the upside, so we can join the rally to the upside. So this is what we are going to be looking forward to on the US tech. So I wish we be on standby to be able to take advantage of this move when it finally happens. So that is that on the US tech. If you have any question, feel free to drop in your inquiries in the comment section, and I will be willing to be of help. So we'll move on to the next pair right now, and the next pair we are going to be looking at is what? Let me see the pair we looked at yesterday. So we have the XAUUSD, that is the gold. So I hope Innocent Babe, I think Innocent Babe is the is a fan of the gold, and here we are. So I hope Innocent Babe is still around. So we have the gold on our screen right now, and what is our expectation here? So what did we see last during the course of live session yesterday? Since the beginning of the week, we've been enjoying a bearish momentum here, and in fact on the gold we are still at a very profitable situation. And remember, we have locked in our profit somewhere above the $1,675 area since the beginning. I think since yesterday we've locked our profits right above that area, and price is yet to come around that level as we continue to see bearish momentum at this point. So where are we yesterday when we made our decision? So as at yesterday, we were around where? Okay, we were around this level yesterday. So we were around here yesterday, and one thing we said yesterday was that there are two possibilities that could be happening here. That is, price might respect this bearish trend line to push price to the downside. We could have that scenario, price continues to the downside from here, or we could have a situation where price comes back into our entry zone at the very strong key level we identified on the daily time frame to join the trend continuation to the downside. And this is what exactly happened yesterday. We saw the situation where price came back into the neckline, did a sharp rejection of that level. On our lower time frame, we will have noticed the multiple rejection of the key level at that area before the move to the downside happened. So price has moved as expected, and we are still within that selling situation here on the XAUUSD. So going into the New York session today, what is going to be our plans? Well, I want to first of all scale up to the higher time frame so that we can have an holistic perspective of what our expectations are, and also to explain to those who are not part of the session on Monday, who are joining for the first time, so they don't miss out on our view and how we got to this point in the market. So let's quickly run through what is happening on the higher time frame. So on the daily time frame, the first thing we observe on the daily time frame here is that price action has been on a very strong bearish momentum since the beginning of the year, and as we can see, we were able to connect the series of lower highs here to give us that resultant bearish trend line. And as you can see, what happened during the course of last week's trading session was quite interesting. We saw a situation where price came back into the bearish trend line here to form a reversal pattern. I will be showing you the reversal pattern on the 4 hours time frame. So we saw price come within that area to do a reversal pattern to respect that bearish trend line. In addition to the current structure we have here on the daily time frame, I was able to identify a very strong and significant level at the $1,680 level. So we have the $1,680 area around here, and if we look into the past, we can see how this level has been a major determinant of price action. So in the month of July, we saw our buyers gathered here to push price to the upside. In fact, we had a very sharp rejection of that level. Then if we fast forward into the early days of the month of September, we saw buying opportunity around that area before we saw the breakdown of that structure during the mid-month of September. And following the breakdown of that key level, we started seeing multiple rejection of that area as price continued to trade right below that key level. However, during the course of last week's trading session, we witnessed this significant breakout of that key level here at the $1,680 level to probably give us a possible momentum shift here. But since the beginning of the week, price has broken down that key level again to emphasize the strength of the sellers at this point in the market. So price is right below the $1,680 level, and then we saw a sharp rejection once again of that $1,680 level to emphasize the strength of the sellers. So there are two scenarios we were actually looking forward to at the beginning of the week. Well, the first scenario was that we want to take into consideration this bullish move. We had this impulsive move during the course of last week, and we might be seeing this retracement as a retracement of that bullish move. So because of this, we wanted to be mindful. We don't want to be too ambitious here, so we were placing our take profit target for the selling momentum we took advantage of at the beginning of the week right within this area, which appears to be the golden zone of that impulse leg. And what do I mean by the golden zone? What I mean the 50 and the 78 point, between the 50 and the 78.6% extent of the previous impulse leg here. So we have the previous impulse leg within this area, so we have cited this area as our take profit target because we don't know how price is going to relate to the structure. So there is a likelihood that price might come here, do a reversal pattern to push price to incite a trend continuation to the upside. So we don't know how that is going to happen. So because of that, we want to be mindful. So we have placed our take profit target somewhere between this area around the $1,670 area and the $1,650 area. So we want to see how price action is going to relate to that level. Now, I said I will show you something on the 4 hours time frame, that is the reversal pattern that incited that bearish move that we're taking advantage of this week. So like I said, we have this reversal pattern here which lines up with the bearish trend line we identified on the daily time frame in the form of a double top structure. So let me show you, let me give you a visual representation of what I'm talking about. So we had this impulsive move, price came back into the neckline we identified at the $1,705 level. Then we saw the breakdown of the neckline. We had a little retest of structure here, and price has continued to the downside from this area. So now looking at the structure we have here, look at what is happening here. Since in the last 72 hours, is it? Oh, 48 hours, I guess. We have continued to see multiple rejection of the $1,672 level. As we can see, buying attempt from this area, we can see that every time price comes into this area, it was met with stiff resistance from the buyers. And in fact, we saw how strong the buyers were yesterday when price moved from this area right back into the key level at the $1,680 level before we saw the second move here. So as at yesterday, we will have been taken out of our position about this. Then price came back again to enter again for that selling opportunity. So if you had entered a second entry, you want to move your stop loss to lock in some profit at this point, and let's see how price is going to relate to this trend line that we have here. So we saw that buyers have been pushing price to the upside, and if we look at what we identified on the daily time frame, we identified the TP target to be around here, which is more or less close to that area. So is this area going to be a demand zone for the second wave of the bullish momentum that started last week? Well, we don't know, and because of the continued bearish momentum here, we want to be looking forward to below the $1,670 area to add more position to the trade. So we'll still continue to look forward to setting opportunities right below this $1,670 level. Let's see how that goes, and if price continue to the downside from that area, we want to be moving our stop loss to somewhere right above the $1,670 level for both the positions we have here. So if you had missed this move at the key level here yesterday, then definitely we want to be looking at somewhere right below the $1,670 level to sell the XAUUSD. However, if the sell momentum does not happen, how do we trade the buy position here? Well, for me personally, what I'll be saying on the XAUUSD is this: I will not be thinking of any buy position here unless I see a breakout of the key level at the $1,680 area. So this is what I mean by that. So last week we had this impulsive move. I think from 2 weeks ago we saw this impulsive move to the upside. Let me give you a visual representation of what I'm talking about here. So we saw this impulsive move to the upside, and since price tested the $1,730 area, we begin to see a retracement of that impulse leg. So the retracement of that impulse leg has gotten into the $1,662 area, and since in the last 2 days now, we've continued to see multiple rejection of that level by the buyers. And then the key level at the $1,680 area appears to be the neckline of this reversal pattern. So if this turns out to be a reversal pattern, the $1,680 level will be serving as the neckline. So what I'm saying here is that I won't be thinking of buying the XAUUSD unless I see a breakout of the $1,680 level. And if a breakout of that level happen, I will not get too excited, as we still have the tendency of a selling opportunity here. Remember, we have the neckline at the $1,705 area, and from a technical standpoint, whenever we cite a breakdown of a neckline or breakout of a neckline, we expect that price is likely going to come back to do a retest of structure to incite a trend continuation to the downside. So because of this scenario here, I'll be very mindful of buying. However, if I cite a significant breakout of the structure, that is an engulfing candle, a significant engulfing candle taking us right out of the structure, we want to look at how price action is going to relate to the neckline. So if we have a situation where we have lower highs evolving into a reversal pattern, probably a double top structure or a head and shoulder pattern, then we want to join the trend continuation to the downside. However, if the trend continuation to the downside happens and price comes back into the key level here at the $1,680 area and we start seeing multiple rejection of that level, then we want to say this is a buy signal. As a breakout of structure, retest will be confirming to join the rally to the upside. So I hope my explanation is very clear here on the XAUUSD. So we need to be very mindful of how we're going to be taking advantage of this move. So at this point in time, I'm still tending towards a bearish momentum here. So I'm still looking forward to below the $1,670 area to sell the gold. So if you missed this trade yesterday, well, below the $1,670 area still looks promising to sell the XAUUSD. Now, if the sell momentum continues and a breakdown of the structure happens, remember we have this buy position here. Buyers have been gathering here to sell, to buy the gold. So if a breakdown of this level happens, that is price action takes out all the buy position around this area, then I want to be seeing this as a bearish continuation signal and want to be joining at a retest of structure on lower time frame. Then we want to add more position to our existing trade there. So this is how I intend to trade the XAUUSD. So I wish you'll be on standby to take advantage of this move when it finally happens. So that is that on the XAUUSD. If you have any questions, feel free to drop in your inquiries in the comment section. Okay, I can see that Innocent Babe is around. Okay, glad to have you around. I hope my explanation on the XAUUSD was clear enough for you. All right, what do we have here? Okay, we have Hi Max in the house. Good morning, Hi Max. You're a little bit late this morning. Trust you are doing well. Nitram, well, we are trading a lot of pairs today and we have actually looked at USOil, US Tech, and we just finished with the XAUUSD. I hope you didn't miss out on this trade, but if you do, we are going to be doing a recap at the end of the session so that you can have a purview of what we've looked at so far. So stay tuned in so that you don't miss out on this information. Nitram, all right, so CAN 786, what I do today is I don't understand that. Kindly rephrase that statement so that I can get a better understanding into what you're talking about. So good morning, GeoPoker. All right, Innocent Baby, yes, it's so clear. All right, thank you very much. Okay, you're welcome. I'm glad you found it clear enough to understand. All right, so I guess we'll move on to the next pair here. So the next pair we are going to be looking at is the GBPUSD. And before I go into the GBPUSD, I also want to share with you that we have a major event coming up today, which is likely going to be affecting the dollar. So this event is going to be affecting price movement on the XAUUSD as well. So there is a likelihood that the consolidation phase we are seeing here is just in anticipation of the FOMC coming up in, I think, 10 hours now. Let me look at the economic calendar here. So we have the FOMC minutes coming up. That is 9 p.m. West African time. So that is like 8 p.m. UTC, I guess. It is as 8 p.m. UTC. So we have the FOMC coming up, and this is going to be affecting the dollar pairs. So we need to get ourselves prepared, and the move is going to be very emphatic as we've been seeing consolidation phases since the beginning of the week on the USD pair. So we get ourselves prepared for that. So now we move on to the GBPUSD, and what is our expectation on the GBPUSD? Well, since the beginning of the week, we've been expecting a bearish momentum since the beginning of the week. So where are we as at yesterday? So as at yesterday's live session, we were around here. Let's see. We were around so we were around here as at yesterday, and we were expecting that price will trend toward below the 1.106500 area for us to join the decline here, but that did not happen. Well, since the beginning of the week, price has been caught within this channel here. That is between the 1.1100 level and the 1.10650 level since the beginning of the week, and we were looking forward to breakdown retest of that structure to join the rally to decline to the downside. Though we had the breakdown on Monday New York session, price came back to our entry point, taking out of our structure position, and what we saw during the New York session was quite interesting, as we saw this emphatic move to shake out people from this market, and price continued to the downside. So I told you yesterday that right below the 1.0650 area will be an area we want to be looking to sell, and that is exactly what happened. Price moved about how many pips from that area to the downside? We had over 140 pips move to the downside. I'm sure you took advantage of that move. If you are taking advantage of that move, kudos to you, and I'm sure you moved your stop loss to lock in some profit when price moved in that direction. And if you are done, you would have taken some profit, though it might not be that much, but at least it's quite reasonable, as price action came back into our entry point once again. So right now, if you are taking advantage of that move yesterday, price action is back into the entry point. And how do we intend to trade this going into the New York session today? Well, the first thing we'll do here, let's quickly run through what it looks like on the higher time frame. And if we scale up to the higher time frame, what do we have? Well, on the higher time frame, it's very obvious we have been on a bearish momentum, but that is not the important scenario here. The most important thing here is the 1.1400 level, which was broken a couple of weeks ago. So we saw the breakdown of the 1.1400 area a couple of weeks ago, and then price came back again to do a retest of that structure during the trading session last week, giving us a clue of how strong the sellers are at this point in the market right now. So since last week we've been witnessing bearish momentum, and since the beginning of the week as well, we've been seeing bearish traction. And one thing we said here, when we scaled down to the 4 hours time frame, we cited the reversal pattern here. Hold on a second, let me show you. So we cited the reversal pattern here at around the 1.0400 level. So as soon as price broke down the 1.1400 level, we saw price come back into the 1.0400 level, evolved into a reversal pattern. Then we saw a breakout of that structure at 1.0900 level, which is serving as a neckline of that reversal pattern. So we saw this impulsive move to the 1.1400 area, and during the later part of last week, price continued to reject that area to the downside. So as at the beginning of the week, we were expecting that price will be coming back into the buy zone area. That is, we will have a situation where price comes back to do a retest of the neckline, and which might probably incite a trend continuation to the upside. So now, since the beginning of the week, we've saw price come back to the 50% retracement of this impulsive move here. So price has come back to do a retest of that retracement. So one thing we want to be doing here is this: how do we intend to trade the GBPUSD going into the New York session today? Well, let's scale down to the 1 hour time frame and let's look at what the structure is giving us here. So for me on this one, I would like to take into consideration this impulsive move that happened yesterday. So we had this impulsive move that happened yesterday. We saw this bearish impulse leg that took price right back into close to the neckline area of the reversal pattern we identified on the 4 hours time frame. So we want to take that into consideration. And how do we do that? We bring out our Fibonacci retracement tool, run it through this impulse leg, and we should be aiming at somewhere within the 50 and the 78.6, which appears to be the golden zone area that we want to be looking forward to selling opportunities on the GBPUSD. And right now it's looking like price is right within that area. And what do we have right now? So we saw price is right back into the sell window, which also shares a confluence with the support level of the channel that price action was consolidating within at the beginning of the week. Remember, we had this consolidation phase here, then we saw the breakdown of that support level of that channel, then we saw the second rejection of that support level. We saw an attempt to reject that support level here before we saw the shakeouts that happened. Then price came back below that support level. So right now price is back at that support level, and we've been witnessing multiple rejection of that support level in the last 3 hours thereabout, giving us a clue that the sellers are still very strong. And if we look at this closely, we can see we have a trend line here, which also lines up with the sell window we just identified here. So we have the trend line here, and we can see rejection lines up right around that trend line. So what I'm saying here is this, that somewhere below the 1.10650 is looking like a very good place to be selling the GBPUSD. So right below this area is looking more promising to sell the GBPUSD, and if price breaks down the 1.10250, retest to structure should be giving us further confirmation to add more position to our existing trade. And our take profit target still remain right around the neckline area, or the buy zone we identified on the higher time frame, which is right within the 1.0900 level and the 1.0600 area. So if we have a very wide area for our take profit target, so the only way we can maximize the profit here is that as soon as price moves in our direction, we continue to extend our TP while we move our stop loss accordingly to lock in and protect our position on this one. So this is how we intend to trade the GBPUSD for today. And then, like I said, the selling momentum is still very valid here. So let's continue to look out for selling opportunities right below the 1.106500 level. However, remember, we always take all possible scenarios into consideration so that we don't get caught up in a dilemma when something different from what we discuss here happens. So what if price breaks right above the 1.11100 level? Well, if price breaks above that area, we want to be seeing that as a bullish signal. And if that happens, that is going to be we're going to be waiting for a retest of structure to happen. That is, price comes back into somewhere around here. We see multiple rejection of this level on lower time frame to join this counter trend. So if you're a counter trend trader, this could be an opportunity to join a counter trade opportunity, which can give you a potential, let's see, minimum of 100 to about a maximum of 250 pips thereabout. So we still have a sell window here. Remember, we had a sell window here after taking into consideration this impulsive move to the downside. So the selling situation here on the GBPUSD is still valid. So if any breakout of that level happens, it's more or less going to be a retracement of that previous impulse leg. So when we bring out our Fibonacci retracement tool, run it through this impulse leg, we have between the 50 and the 78.6 area. Okay, so we have somewhere here as our take profit target. If you are taking that counter trend, if that happens, so if you are not a counter trend trader, then you want to wait for price to come within this area, evolve into a reversal pattern, then we want to be joining the decline to the downside. So this is how we intend to look at the GBPUSD for today and for the rest of this week. So let's see what happens in the next 24 hours. So that is that on the GBPUSD. Like I said, if you have any question, feel free to drop in your comments. I'm already out of time, so I hope you permit me to run through the other two pairs. So we still have the silver to talk about today, and we have the USDJPY. So what I'll be doing on these pairs is that I will run through them as fast as possible, and I will make it as simple as possible too as well, so that you can have a better comprehension of what I'm talking about here. So the XAGUSD, which is the silver, so what do we have here? We still have that bearish momentum running here on the XAGUSD. So the situation we have here as at yesterday, where were we yesterday? We were around here. Hold on a second, let me find that out. So we were around here yesterday. We were around the $19.40 area, and we took advantage of this move on Monday. Remember, we saw the breakdown of this channel where price has been consolidating within since the beginning of, price started at around the $20 level. So we had price start around here, and I told you I missed that move, remember? So we saw price caught up within this consolidation phase here, and we said if a breakdown or breakout happens, we want to be joining, and we saw the breakdown of that structure. Price came back to do multiple rejection of the $19.70 area. In fact, we had multiple rejections, so it gave us a room to actually join that sell continuation pattern. So we saw price come back into the $19.30 area. So we were around here yesterday, and one thing we did was to identify a couple of parameters that will be guiding our action in the New York session yesterday. So the first parameter we were able to identify here was this bearish trend line. So we said if price comes back into this bearish trend line and rejects that bearish trend line, we want to be joining the decline, but that did not happen. We saw price break out of that trend line, and then we saw price come back again below that trend line. So as at the New York session yesterday, I was able to identify this $19.30 area, and I said if price breaks down that trend, that neckline, that's $19.30 level, and we have a retest of structure, we want to be joining the trend continuation to the downside. And what happened since the beginning of today's session, we saw multiple rejection of the $19.30 level. So we saw in the last 5 hours now, 5 to 6 hours thereabout, we have been seeing multiple rejection of this level, giving us a clue into the strength of the sellers at this point in the market. So a breakdown retest of structure confirmed a selling opportunity. So if you had missed out on the sell situation we took advantage of here on Monday, I think the market is giving us another second chance to actually join this trend continuation to the downside. So right below the $19.30 area seems most appropriate to be joining the second phase, which I'm already in at this point in time. So for those who have been in this trend since Monday, please move your stop loss to lock in some profit at this point, and around the $19.30 area, right above the $19.30 area, looks more promising to be locking in some profit here. So let's see how price action plays out as the week goes by. So for the XAGUSD, I'm still expecting that sell momentum to continue to the downside. So what if a breakout of that structure happens? That's another question you might want to be asking, that what if a breakout of the structure happens? Well, a retest of that structure, multiple rejection of this area on lower time frame, or reversal pattern could be sending price right back to where price started this week at around the $20 level. Then if you are a counter trend trader, you might want to take advantage of that move, and if you are not, then you want to wait for price to come within this area to look out for a selling opportunity. Remember, the FOMC is coming up today and is likely going to affect price movement, and if price breaks out, we could see a sharp rejection of this level to push price to the downside. And if that does not happen, then below the $19.30 area is looking very promising to continue to sell the silver for this week. So that is my view on the XAGUSD. If you have questions, feel free to drop in your inquiries in the comment section, and we'll be willing to be of help. Okay, let's see before I go. Okay, all right, so Alevnoa is here. Good morning. Well, you came in towards the end of the session, so probably tomorrow you want to join us. 666, good morning to you. You also came in towards the end of the session. You might want to join us tomorrow so that you can be part of this. So let's quickly run through the last pair we are going to be looking at. So on the USDJPY, we are in a very strong and positive scenario after such a long time. Remember, we've been monitoring this pair for the past 1 month now. Price has been caught within a consolidation phase right around the supply zone here, and then we've been within the dealing and darling around this area, caught up within the consolidation phase around here, as price has continued to be within the tussle of the buyers and the sellers since last month. However, since the beginning of the week here, we saw this consolidation phase around this area. That is, price has been consolidating right within the 145.500 area and the 145.800 level since the beginning of the week. So we have been witnessing this consolidation phase, and we have been looking forward to a breakout of that structure to give us a signal, though we have been tending towards a bearish momentum because of the fact that we are within the supply zone. So we've been looking forward to selling if we cite a breakdown of the structure, retest to structure to join the decline, but that did not happen as we saw the breakout of that structure at the 145.650 area happen. As at was it not 2 days ago we saw that, and as at yesterday we are running in a loss. Price was still around this area as at yesterday, and not until the later part of the New York session yesterday, I think at the time the New York session closed yesterday, we saw this big bank moving to the upside at this point. So if you had been in this trade, kudos to you for being on standby to take advantage of this move. And currently we will be running with about how many pips in profit right now? We're running with about 85 pips in profit, which is not bad at all. So the next thing we want to be doing here is to move our stop loss to lock in some profit at this point. So somewhere below the 146.1 area, we'll be looking promising to lock in some profit here. So now that we're heading into the New York session today, what is going to be our plans? Well, remember we had the structure here that we identified on the 1 hour time frame yesterday. Was it yesterday or 2 days ago? We had this bullish trend line that has been holding price action since the later part of last week, and we want to be using this yardstick as our guide going forward. So if you had missed out on this move that started in the last 3 days now, if you had missed out on this opportunity we took advantage of here on the USDJPY, well, you want to wait for price to give us another confirmation, probably to add more position to this trade. That is, if you have been on this trade since Monday, and if you are not, then we want to wait for price to come back around here so that we can join the trend continuation to the upside. So as this one is going to be moving, sincerely speaking, I want to be extending my TP target. Remember, we have been in a very strong consolidation phase, and it appears the buyers have finally won that tussle. And if we are caught up within a consolidation phase for an extended period of time, you know what happens when a breakout of that structure happens. It's always going to be massive. So because of this, I will be extending my TP accordingly as price action moves in my favor. So and I'll be moving my stop loss accordingly as well. So for those who are not in this trade yet, well, I will be suggesting that you remain patient and wait for price action to give you another entry. So we have this bullish trend line as our yardstick, so we can wait for price to come within this area. So in addition to that, to make our job easier, so what I'll be doing here is to identify another structure that we can be using as our yardstick as we head into the New York session. So for those who are not in this trade yet, so we have somewhere around here. Remember, we have this multiple rejection around here during the early hours of today. So let's see how if price is going to come back into that area. And if you look at it, that area also shares a confluence with that bearish trend line. So we have, what area is this? Let's label it for the sake of clarity. So we have the 146.200 level, which is also a very strong psychological level considering the round figure of this price. So we have the 146.200 area. So let's see how price is going to relate to the structure. Are we going to see price come back again into the structure, lines up with this bullish trend line to join the trend continuation to the upside? So that is how we are going to be looking at this trade in the meantime. So well, what if a breakdown of this trend line happens? Well, if a breakdown happens, retest of structure will be inciting a trend continuation to the downside. So for this week, the bullish trend line is going to be our guide. So that is how we want to look at the USDJPY. And on this note, I want to call it a day. But before I do, and especially for those who missed out at the beginning of the session, well, what we want to be doing right now is to do a quick recap of what I've talked about so far, so that you can have a better perspective, a little perspective, if I might say, into what our expectation has been. Well, the first pair we looked at today is the US oil, and on the US oil we've been enjoying this bearish momentum since the beginning of the week, and the next thing we did today was to move our stop loss accordingly to protect our position against any sudden pullback that might be happening at this point. Right now, price is right back at the $89.50 level, which has been rejected by the sellers in the last 6 hours, to give us a clue that the sellers are still very strong in this market. But the fact that we understand that the sellers are still very strong in this market, we cannot ignore the fact that buyers have continued to reject the $88.50 area, to give us a clue that the buyers are also very strong at this point in the market. And I also mentioned the fact that the OPEC Plus had a meeting last week, and the decision was to cut oil production. And definitely when oil production is cut like this, there will be scarcity, and when there is scarcity, there will be an increase in demand, and definitely price might skyrocket. And we've been seeing a reflection of that in the last 1 week. Now we saw this impulsive move last week, breaking above the important key level at $86 level, and then we might be seeing this as a retracement of that impulsive move. And the retracement phase, we don't know when it's going to end. Is it going to go as far as the $86 level before we start seeing the second wave of that bullish momentum? We don't know. Or is the $88.50 level, which has been rejected in the last 2 days now, be the area that will be inciting the second wave of that bullish momentum? Well, that's another possibility we want to be looking at. So what I said here is that if we are going to be buying the US oil, we want to see a significant breakout of the $89.50 level. And if we sight a breakout of the $89.50 area, remember, we are not getting too excited at the sight of that breakout. We want to wait for further confirmations to happen, which is likely going to come in the form of a retest of either the $89 level or this bearish trend line that we have here, after which we look out for patterns on lower time frame that will support a trend continuation to the upside. So that's the first scenario we are looking at. Now, the second scenario is that the sell momentum is still very strong here. Remember, we have this bearish trend line on our chart, and price has continued to reject that level, respect that level one way or the other, and we don't know if this move is going to be inciting that bearish momentum in that regard. So because of this, we went down to the lower time frame to be able to see what is really happening around here. And when we scale down to the 15 minutes time frame, what did we see? We saw a situation where we could actually connect the series of lower highs here to give us this temporary bullish trend line, I will call it. And if I see a breakdown of that bullish trend line, then definitely a retest of structure is confirming that sellers are still very strong here. Then we want to be joining the decline right below the $89.50 level. However, if this bullish trend line continues to support a trend continuation to the upside, like I showed you on the 1 hour time frame, where a breakout retest of this key level, probably this bullish trend line, will be sending price to the upside. So these are the scenarios we are going to be looking forward to on the US oil. Then we went on to talk about the US tech, and on the US tech, though we have been on a very strong bearish momentum since the beginning of the week, as we were able to have this bearish trend line. And we also emphasize the fact that price is still within that very strong demand zone we identified on the daily time frame. Let me show you. So we have this demand zone here on the daily time frame, which has been respected by the participants in this market since the month of June. So we can see in the month of September, we saw multiple rejection of that area. And right now, price is somewhere around that area, though a little bit below that demand zone, but it's still around that area. So this might likely be a false breakdown. We don't know yet, but we are in a sell position on this one. And we have moved our stop loss to break even to protect our position against any sudden pullback. Now, in order to trade this US tech for this week, we have this $10,850 level as our guide. So if you had missed out on the seller position we took advantage of on Monday and Tuesday, we want to be looking forward to a breakdown of the $10,850 level. Retest of that structure, then we could actually join the decline to the downside. However, if price breaks above the $10,950 level, that is taking us out of our sell position, which remember we've moved our stop loss to our entry zone. If price takes us right above the $10,950 area, then that is probably going to be a bullish signal, as we already have a breakout of this bearish trend line, breakout of the $10,950 area, inciting that bullish momentum. But remember, we are not going to be getting too excited when that happens, as we want to wait for price to come back and do a retest of the 10,950 or probably the 10,850 or the bearish trend line here, after which we look out for patterns on lower time frame that will be supporting a trend continuation, which also lines up with that demand zone we identified on the daily time frame. So that is that on the US tech. Then we went on to talk about the XAUUSD, and it appears a position will have been triggered now if you are trading right below the $1,670 level, which I said is more or less an area that is comfortable. Anywhere above the 1,670 does not look promising to be selling the XAUUSD. So we've been on a bearish momentum since the beginning of the week, and we've been running with about over 1,000 pips right now on the XAUUSD. And the first thing I said here was that you move your stop loss to lock in some profit. I I suggested somewhere above the $1,675 area as an area to lock in some profit here. And one thing we said here is that despite the fact that we have this bearish momentum here, we cannot ignore the fact that buyers have been gathering around the $1,661 level to push price to the upside from that area. So because of this, we would not want to ignore any buy potential opportunity here. So in as much as we are still looking forward to that sell momentum to continue, if a breakdown of the 1,672 level happens and a retest of structure happens, we want to add more position to our existing trade. However, to buy the XAUUSD, I will not be looking to buy the XAUUSD unless I see price break out of the very important key level at the $1,680 area. Remember, we had this key level identified on the daily time frame. Let me show you one more time for those who are not part of the session. So we had this key level here, and we showed you how important that key level has been in the last 3 to 4 months now. And that key level has been a major determinant of price action in the past. So if price continues to break right above that key level, then we want to be thinking of buying the XAUUSD. But that does not give us a confirmation to buy already. It's not an outright confirmation, as we still need to do some monitoring to know if really that move is really bullish. Now, the reason why I've said that is simply because of this reversal pattern we identify here. Remember, we had this double top structure. We had a neckline at the $1,705 level. We saw the breakdown of that structure, and from a technical standpoint, whenever we cite a breakdown of structure like this, we expect that price might likely come back to do a retest of structure to send price in the direction of the prior leading price action. So in that regard, there is a possibility that price might come back into this area, do a reversal pattern here to send price to the downside. So that is a very strong possibility. So even though we are seeing the breakout of the key level at the $1,680 area, we don't want to get too excited. So now, if price breaks out the key level at the 1,680 and price comes back into the neckline one more time to do a retest of that structure, and we start seeing multiple rejection of the $1,680 level, then we want to be seeing this as a potential that the buyers have come in to stay. So a breakout retest of structure on lower time frame, which might also share a confluence with the breakout of that bearish trend line we identified on the daily time frame, might be that confirmation we will be looking forward to buy the XAUUSD. So that is how we intend to trade this. So on the XAUUSD, I'm still holding my sell position here. Now, moving on to the GBPUSD. So what do we have on the GBPUSD? So like I told you, our bearish momentum on the GBPUSD still remain valid, as we still right within the sell window we were able to identify around here after considering that impulsive move that started last week. So we are seeing this as a retracement back into the golden zone area, which is right within the 50 and the 78.6% of this impulsive move to the downside. So we have an area here, so we are looking forward to selling here. So for me personally, I told you my entry will have been triggered at this point, as right below the 1.10650 is looking more promising to sell the GBPUSD. So now if price now further goes down to break down the 1.10250 level and does a retest of that structure, or probably retest of this bearish trend line, then we want to be looking out for patterns on lower time frame to add more position to our existing trade. So on the GBPUSD, we are still remaining very bearish here. And one thing I said here is that on the contrary, if price breaks right above the 1.11100 level, that is this level here, then we want to be seeing that as a bullish signal, which for me is looking like a retracement of the previous impulse leg. So if we have a breakout, a retest of structure, for those who love counter trend opportunities, you could take an advantage of a counter trend opportunity with your take profit target somewhere within the 1.12 area and the 1.1400 level. And the reason why I say that is simply because we are on a very strong bearish momentum here, and the take profit target within the sell window here looks more reasonable if you are a counter trend trader. But if you are not, then you want to be patient enough to wait for price action to come into the sell window here after which we want to be looking out for patterns on lower time frame that will be supporting a trend continuation to the downside. So that is that on the GBPUSD. Then we went on to talk about the XAGUSD, which is the silver, and on the silver we're still holding our bearish momentum here as my second position has been triggered right below the $19.30 area, and I'll continue to watch out for price to continue to remain right below this level. So I've told you, for those who have been part of this trade since Monday and Tuesday, you want to be moving your stop loss to lock in some profit somewhere right above the $1,930 area, and let's see how price action plays out in the New York session today. So if price continues to trend to the downside on this one and price breaks down this bearish trend line, we want to add more position to this trade, extend our TPs accordingly as price action continues to the downside. So if we have a breakdown of the $19 level, which is going to be around here, yes, that's the $19 area, we want to be adding more position to our existing trade. So that is how we intend to trade the XAGUSD going forward. Then the last pair we talked about today is the USDJPY, and on the USDJPY we have been on a very strong bullish momentum, and which makes us very positive on this one after waiting for over a month to make a decision here, as price has been doing a consolidation phase right within the strong supply zone we identified on the higher time frame. Let me show you one more time for those who are not part of the beginning of the session. So we had the supply zone here. I think it's clearer on the 4 hours time frame. Let me show you on the 4 hours time frame. So we had the supply zone on the 4 hours time frame here. As we can see, since the beginning of last month, price has continued to oscillate right within that area. Every attempt by the buyers to push price right above this area has been met with stiff resistance from the sellers, not until the later part of yesterday when we finally saw the breakout of that supply zone. So that is what we're looking at this point in time. So price has already broken above that level, and we are already in profit on the USDJPY. So like I said, for those who had missed out on this opportunity that we took advantage of on Monday, well, you want to wait and be patient to see if price will come back into the 146.200 area, and look out for multiple rejection here, or probably a reversal pattern on our lower time frame to join the rally to the upside. And in addition to that structure here, I was able to identify this temporary bullish trend line here, which I said will be serving as our yardstick for any bullish opportunity here. So we want to see price come back and do it and respect that bullish trend line to add more position to this trade. If that does not happen, then we leave this position and let it run its course. However, I told you that I will be extending my TP accordingly, considering the fact that we have been within a consolidation phase for an extended period of time, and whenever, from a technical standpoint, whenever we have a consolidation phase that has lasted for a very long time, when the breakout finally happens, it's always very huge and massive. So since we finally have a breakout of that supply zone here, I want to be extending my TP as soon as price continue to move in my direction. So once price get to the 147 Japanese yen level around here, I move my stop loss accordingly and extend my TP again to the 148 Japanese yen area, so that I can maximize the profit after waiting for so long on the USDJPY. So that is that. On this note, I would like to call it a day. I really appreciate every single one of you, and every moment I had with you was quite interesting. So I look forward to seeing you again tomorrow the same time, 10 a.m. UTC, 11 a.m. West African time, same place, Extra Speed Live. Let's come here once again to analyze the market and get ourselves prepared for the New York session coming up tomorrow. And as well, we are going to be reviewing all the pairs we've been monitoring since the beginning of the week, and I'll be sharing my thought process on the pair. So thank you very much once again. I wish you best of luck during the New York session today, and please remember the FOMC is coming up in 10 hours time from now, and every activities in the market will be anticipating this event. So we want to get ourselves prepared, lock in your profit so that you can protect your position against any sudden pullback that is likely going to happen. And remember, don't get too excited when we sight a signal like a bullish engulfing candle or a bearish engulfing candle. Don't get too excited. Let's wait for that signal to give us a confirmation which will likely come in the form of a retest of that structure before we want to be joining the potential rally or decline. And if the retest does not happen, if the confirmation does not happen, it is okay to pass the trade. There are tons of opportunity in the market that we can actually take advantage of, and if we miss this one, there are other opportunities to take advantage. So on this note, I wish you a wonderful day. Best of luck today, and I hoping to see you tomorrow. Bye bye.